Well, good evening. Happy Monday. Well, it's happened, guys. The Fed cut the rates last week. So mortgage rates have come back down, although they did come back down prior to the Fed announcing their cut of 25 basis points. But now there's all this anticipation. Analysts are, screaming from the rooftops, this is going to impact the housing market. How will it impact the housing market? That's what we're going to talk about tonight, like we do every week. So if you are new here, thank you so much for joining me. My name is Jackie Baker. I'm a realtor here in Northern New Jersey, and this is my live dose of real estate reality. So we talk about the housing market, real estate, all the things, and I'm also here to happy to answer any questions that you have. So the house rules, as you know, if you have a question down below, you see in the little banner down there, please put QQQ at the beginning of your statement, your question, so my producer can identify the questions and put it up on the screen. Super important. Also, if you have a housing win, okay, so if you just recently got your offer accepted or you sold the house, you got under contract, what have you, please put it in the chat. We love to celebrate the housing wins because the housing market has, not going to sugarcoat it. It's been a real bear the past few years, and we like to celebrate these housing wins. People are still buying homes. So we want to celebrate that. So please put that in the chat. And it's at a certain point in the stream, we will put those wins up. So yes, my sound is back today. So yeah, okay. When you have a middle-aged menopausal woman dealing with technical stuff on YouTube, things don't always work out that great. So thank God for my 25-year-old son and my producer, Jen, because they've been helping me all weekend figure this stupid sound issue out. And it was something really minor, and we got it figured out. So I'm glad to be back. Anyway, so hey, someday defect. Yes, autumn is here. This is my favorite season. Love the fall. It's sweater weather. I love it. I'm so excited. Thanks, MH. I'm so glad you guys came back. I'm so glad. Thank you so much. Oh, yeah, Jared. I try. Anyway, don't forget to tip your waiters. Anyway, so let's get into it. So Fed announced last week they cut the federal funds rate by 25 basis points. But as you know, that doesn't directly correlate to mortgage rates, right? Mortgage rates follow the 10-year treasury yield. But the mortgage rates were coming down anyway prior to that meeting last week with the Fed. So what gives? Well, because the banks were anticipating this, that Jerome Powell was going to make this announcement. So therefore, the yield, the 10-year treasury yield reacted positively. So therefore, the rates, the banks were like, okay, we'll lower the mortgage rates, right? The Fed's doing this. Then the economy must be looking good. So we're gonna take care. We'll take care of it. We're gonna lower the rates, but inflation is still high. It's not to that 2% number yet. And then we did see a little bit of a surge in unemployment, but we, sorry, even with those conditions, mortgage rates typically come down even when you have a sluggish economy. Why? Because they want to stimulate the economy. They want people to be able to go out and buy things, right? So when you lower the interest rates, it just makes things a little bit cheaper for people. So anyway, we're going to get into the articles right now. So as you saw from the title, they're anticipating this is going to shake up it's going to shake up the housing market. So let me share with you from Housing Wire. Here we are. Okay. So Housing Wire did this report, and I really love Housing Wire. So it says you have lower mortgage rates already changed the housing market. So they say here mortgage rates fell to almost 6% just before the Fed announcement on rate cuts, then rose slightly to close out the week. Have lower mortgage rates already changed the housing market? Yes. Housing data started to change in our weekly housing market tracker in mid-June, and I'm writing this weekend's tracker a bit differently to focus on the impacts of lower mortgage rates on the supply and demand of data lines since then. This is written Logan Mutashami. I love this guy. I follow him all the time. As a matter of fact, he's coming to our our realtor association meeting in October. He's I'm like kind of excited to meet him. I'm not going to lie. Anyway, um, so he wrote this article. This was his opinion about the impact of the low rates on the housing market. Now, housing inventory. The best story about housing in 2025 has been the inventory growth, which has brought us closer to what a normal housing market looks like. After the extreme seller's market that followed COVID-19, we experienced unhealthy housing market conditions in late 2020. By early 21, I was talking about the need for higher mortgage rates to cool things off, but that didn't happen. By early 22, the housing market was savagely unhealthy. You think? Yes, it was. So far, 2025 has been the healthiest year for the housing market since the pandemic. That said, the inventory channels have changed recently. The housing market began to shift in mid June, and inventory growth slowed significantly to the point that for the first time in many years, our inventory data showed a decline in August, which is not the usual pattern. In early August, I believed we had yet seen the peak in inventory for 2025, and I anticipated inventory would grow above recent highs. So far, that hasn't happened yet. Additionally, we are approaching a seasonal decline period, which has happened in October, November in recent years. On a percentage basis, we peaked recently at 33% year over year growth and are now running at 20%. So, yeah, so guys, the inventory is still really low. I think what's going to happen, I mean, the rates, it is a good thing, but it's still not enough for these sellers to put their homes on the market. They still have those stupid golden handcuffs of interest rates below 4%. So listen, I don't blame anybody that's sitting on those low interest rates. I totally get it. I mean, a lot of you have commented here on the stream, you have a rate of 3%. You're not going anywhere. I totally get that. But I digress. All right. So he goes on to talk about new listings and price cut percentages, a range of 80,000 to 100,000 new listings every week during the seasonal peak months should be standard for this data line, but it hasn't been normal since the pandemic. We've been slowly working our way back to normal inventory, and for 2025, I expected we would get at least 80,000 weekly new listings during the peak seasonal months. So I was pretty excited when we saw over 80,000 listings printed in late May. However, I didn't anticipate that this would be the peak for the year. Since then, we have been gradually declining, and we are now in the usual seasonal decline. This new listing situation impacted the market dynamics in mid-June, resulting in fewer sellers in June, July, and August, particularly as mortgage rates began to decrease. The price cut percentage data has stabilized recently and has decreased slightly. Now let's talk about the demand. He's saying on the demand front, we have enough data to prove that once again, when mortgage rates get below 6.64% and head towards 6%, the forward-looking data gets better with positive weekly data, similar to what we saw in late 22 and the mid part of 24. The key is knowing where to look. Purchase application data has had its best 7 weeks of the year, all when mortgage rates fell below 6.64%. The trick with purchase apps is that you need 12 to 14 weeks of positive week-to-week data, similar to what we had in 22 and 24. That hasn't happened yet, but over the last 7 weeks, this is what the data has shown. 6 positive weeks, 1 negative, and 7 straight weeks of double-digit year-over-year growth. If we can get 6 to 8 weeks of positive data week to week alongside year-over-year growth we experience, late October or early November could be the timeline for that. So here's the data for 25. Note we have a good year-over-year growth, but the week-to-week was choppy into the last 7 weeks. We had 18 positive readings, 12 negative readings, 6 flat prints, 33 straight weeks of positive year-over-year, 20 consecutive weeks of double-digit growth year-over-year. So look here on this chart. So the weekly pending sales. So you see here, can you guys see this? I hope you can. Make it a little bit bigger for you guys. So weekly pending sales, if you look here where we are right now, September of 25, 64,391. A year ago, it was 61,952. And then look at 24, and then look at how much it dropped. by December. So this is a good sign. This is a really good sign. Let me stop sharing this for a second. I'll bring back. Okay. So is it like, are buyers coming out like gangbusters? They're coming back. They're coming. I talked about this in the last couple of weeks where buyers were on the sidelines. They were like, hell no, I'm not buying a house. I'm not doing this. The rates are too high. And he's so right. Logan is so right. When those rates drop below that 6.6, 6.5% range, out they come. My client yesterday stopped at an open house, and now the line wasn't out the door, but there was traffic, and she was there at like the last, like maybe 15 minutes or half hour of the open house. So there was steady traffic coming through. Um, Two of the houses that we looked at, the one she saw at the open house, and then we went and saw one. I had a private showing. They are calling for highest and best already. Now, do they have 10, 20 offers? No, they don't have that many offers, but still multiple offers. Okay. But the fact that the buyers are back out again, it's because of this. It's because of it, the mortgage rates are coming down. So now I have another opinion about this. You heard me say this, where I think we got to be careful. This is where we need the balance, where you got to have those rates at a certain point where it's enough to incentivize sellers to list their homes. Otherwise, we're going to see prices skyrocket again. If those rates go too low, everybody's going to come out and there's not enough homes, and it's just going to create more chaos, and the super high prices, like, it's just going to go higher than what they are now. So Miss H has a question. How are you, Miss H? So when the rates come down, how do you feel or think that will affect or help people selling their home, knowing that the prices are still so high, no one wants to pay what they're still asking? Well, listen, sellers gotta get real. You have to get real. So they're not selling, at least now I'm seeing here in Jersey, it's definitely calmed down a bit. We're seeing the shift. Sellers are still, this is the other thing, Miss H, it just popped in my head. Sellers are also pulling their homes off the market if they feel they're not going to get the price that they want. If they're not going to get that pandemic price, they're like, forget it. I'm not even going to bother. But look, there are people that still need to sell their homes. So you got to be realistic about your price. So, hey, Ray Zimmerman, don't think 0.25 in interest rate will make much of difference. Well, it's a 25 basis points on the federal funds rate, which doesn't directly impact the mortgage rates. But listen, any slight drop, like you saw here in this chart, you get below 6.5. I mean, last week, well, actually, speaking of mortgage rates, hold on a minute. I did pull up an article that and mortgage rates. Here we go. Yeah, all right. They were unchanged as of today. Let me pull this up. Okay, Mortgage News Daily. This was today. After hitting the lowest levels in nearly a year, last Tuesday, rates lurched higher following Wednesday's Fed announcement. When the Fed cut rates as expected, while the Fed's rate forecasts were well received, Powell's guidance pushed back in another direction. Economic data on Thursday morning made things worse, making for a fairly sharp 2-day spike. When things calmed down after that, Friday's rates were a hair lower, and now today's rates are right in line with Friday's. Where are we? So what is the rate? Is this over here? Okay, so over here we have 6.35% for a 30-year fixed rate, which is like it's below 6.5. So people are still going to buy. You see this over here, 6.35%. So now if you get points, if you pay discount points, you probably get it even lower than that. You will get it lower than that. So anyway, do we have any other questions going on? Okay. Finally joined on, been busy cleaning and painting and started our first time in Roxbury, which we closed on 8/28. Awesome. 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 Congratulations. Thanks for the cheering in the background, Jen. Oh my gosh. Fernanda, thanks for being here. I rewatch your videos, but your audio, it's been I know the last two. You know what it did? I ended up unlisting them. I pulled them off because like they were horrible. I'm back. I'm back, guys. I'm getting there. Getting there. Happy autumn, Christian. Thanks for being here. Yes, I'm very happy it's fall. Hello, Clark. What's going on, my friend? So, Sabrina, is there a way to identify if a home asking price is overpriced? That's a good question. So, what I would do if you're working with a realtor, your realtor is going to check comps, meaning they're also known as comparables. And if they see homes that are similar that sold less than what that house sold for or is asking for, then you know it's overpriced. Um, Another way you know it's overpriced if it's sitting on the market. So my rule of thumb, if a home has been sitting, like I'm going to say now that we're shifting, I'm going to give it a little bit longer time, say 3 weeks. We're getting into 30 days, a month. If it's sitting there, so then we're talking here in Jersey, right? I mean, even across the country too. It's average, I would say, about a month or so. Um, you're overpriced if the house has been sitting there. Number one reason why a house doesn't sell, it's the price. So you want to look at days on market. David says not the right prices are just high. I agree with you, but the only way, David, the prices will come down is if we get more inventory. We need more inventory, create more competition, more choices, right? So sellers need to get their prices in line. But I agree with you, the prices are out of control. Hello, MH. Today's rates aren't crazy. It was the 3% rates that were crazy. I'm locked in the low rate, no motivation to sell. MH, I get it. I totally get that. But for people for people who want to who need to move, they need to upgrade their home, at the 5% might make it for them. Candy C, how are you? How is fair market value determined? Well, fair market value is we look at the comparables, right? We're going to look at homes that are similar, right? We want to compare apples to apples. So you're going to look at homes that are similar to your home, right? Or the one you want to purchase, and you want to make sure that everything's in line, right? As far as your upgrades, if lack of upgrades, what have you, and that's how you determine your fair market value, right? You're looking at what has sold within the last 3 to 6 months. This is the rule that appraisers follow. So that's how that is determined. Healthy horticulture. What a great handle. Thanks for being here. How much negotiating power do I have when paying cash? Moving from Connecticut to Ohio in a few weeks. So it depends on the timing and the market. Okay. So if you're looking at a house that's brand new, right? It just came on the market and you're going to go like, if you're going to maybe offer a little bit less because you're cash, that might work, but don't go in lowballing right out of the gate because more than likely they're going to go with somebody with the mortgage who's going to offer a higher price. So listen, it's great, it's great to have, but a lot of people have this idea in their head that like, oh, I'm paying cash. You're going to want to work with me because you don't have to worry about me getting an appraisal and going through getting approved for a mortgage. So I'll offer like 50,000 under your asking price because I'm saving you the aggravation of dealing with worrying about a mortgage. No, that's not worth it to people, especially if you're coming in right out of the gate. If it's something that's been sitting on the market for a while, you might be able to offer a little bit less, maybe 5%, but yeah. I mean, you don't and if it's a seller's market still, you don't have that much negotiating power with cash. I mean, you do as long as you're coming in at list price or even over list. But if you're thinking of coming under list, yeah, not especially not if you're in a seller's market. Laura just bought in Northeast Tennessee. Thanks to you. Oh, Laura, congratulations. Oh my God. Yay. We used your recommendation. Thank you. Got a VA loan and it went well. 6%. We'll refinance ASAP. Have a condo to sell in Crystal River, Florida, feeling confident. I am so excited for you. Thank you for coming on and sharing that. You see, when I love this. I love when I get people connected to the best real estate agents. Thank you, Laura, for sharing that. Hey, Edward, we put an offer in on a home that had been sitting for 65 days. Sellers would not budge on the asking price, even though the comps didn't support. They had two open houses after our offer and delisted. This is what's happening. And I shared with you all, we had a listing, our team had a listing over the summer. We put it on the market in June. The seller had it on listed with a prior realtor. He was way overpriced, and we came in at our price. And within the first 2 weeks, we knew we were still overpriced with our price, and we were suspecting that. We're like, I don't even know if this is going to do it, but let's try it. And he wouldn't do it. He didn't want to do it. He didn't want to. He that was it. He was annoyed. He didn't get any offers at his price. He took it off the market. So it's happening a lot. Hi, Sabrina. Love everybody here. Thank you so much, Sabrina. Oh my gosh. Oh, Candy, thank you. Yes, everybody hit that like, please. Because what it does, this puts the video out into the YouTube universe, right? YouTube sees you guys on here and you're liking it. It's going to feed it out to more people. So it's, because they need to learn too. Hi, Kat. Thanks for being here. All right, we got another. Let me see. Hi, Michael. No, you didn't miss too much. You're good. You're right on time. Has a national housing emergency been declared? I think he did declare that. Hold on a minute. Because I talked about that. He was going to emergency. Let's see. Hold on. I don't think he has. Yeah, I don't see anything that everything here is saying potential, like he hasn't done it yet. Anyway. No. Oh, it says here, there is no formal federally declared national housing emergency. Yeah, no, it was never declared. So, anyway, Tropical Tim in the Philippines. Oh my gosh, thank you for being here. I'm educating myself on real estate a lot. How vulnerable would I be buying and shopping without an agent? I'd be very careful about doing that. If you're a first-time buyer, I'm going to tell you, you align yourself with a real estate agent that works with first-time buyers, that's very familiar with first-time, that they like working with first-time buyers. Because believe it or not, there are realtors out there that don't want to work with first-time buyers. I love first-time buyers. I love it because I love teaching, I love educating, and and just being part of that whole journey with the buyers. It's a lot of fun for me. But I love helping people because I remember what it was like. You need to align yourself with an agent. Going it alone, you don't want to be taken advantage of, and you need somebody to guide you through that. You need guidance through that process because it's very stressful. It gets very emotional, and you need somebody to advocate for you. So that's my story, and I'm sticking with it. Does new rate supposed to make buyers buy more actively? Thank you. You're welcome, VK. So yeah, it's supposed to entice people to want to go out and spend money. Okay. So if you have a lower interest rate, just like during the pandemic when we had rates 3%, 2.5%, it was a frenzy. It was a buyer frenzy, like I saw on my thumbnail. It was a frenzy because people are like, oh my gosh, money is cheap. Let's go buy a house. And that's what happened. So yes. Blue Hyacinth, is a property surrounded by mature trees a big mistake? Like no backyard but full of trees, about 10, 15 feet away from the foundation. That's really close, in my opinion. Tree removal is expensive, very expensive. And if there's that many trees in the backyard and you're going to have to remove them. I mean, that's something you would have to do piecemeal over time. I know that's what we did in our house. We did have a number of trees, a couple that were fairly close. And like the first year we were living here, we took down maybe like 3 like really big ones. And then a few years later, we took like another 2 more down. So you have to, it's a project and it's expensive, but I would be careful of that. I mean, look, I'm not saying, don't buy it, but is something to really take into consideration, because the first bad storm that comes through and that comes lands on your roof, no, thank you. Need some water. Thank you, Mary Beth. I'm just glad you're here. David asked, how does holding an empty house make any sense? You're giving up alternative ROI as it sits there. I don't know. I don't know. So you're talking about like somebody has their house on the market and it's empty and they're not, not reducing the price and it's just sitting there. I don't know. I does not make sense. Oh, Candy, you're awesome. Thank you so much. Thank you. Listen, it's my pleasure to help you guys. It really is. Sarah says, I took your advice to shop around for a lower rate. The original lender matched my lowest rate offer and I closed in a couple of weeks. Yes, that is a huge win, Sarah. Thank you so much for sharing that. This is what we're supposed to be doing. Shop out your rates. Okay. Another article. So there's like a lot of talk, guys, about how are the rates going to impact the market. I pulled up some interesting info. Realtor.com. This is what Realtor.com is saying. So of course, they had to go bring up the whole 3% rates again, right? They just say here, the Fed just cut rates. Will mortgages ever fall to 3% again? I know that answer. I know what they're going to say. No. Anyway, so here's what they are saying. While the Fed's decisions, let me make this a little bigger so you guys can see. While the Fed's decisions are sure to bring some relief to homeowners, home buyers and sellers, don't count on a 3% interest rate happening again anytime soon. The unprecedented conditions that triggered these historically low rates are not likely to be repeated. It is unlikely that rates will drop to 3% in the foreseeable future. Still, millions of home buyers are holding out hope that mortgage rates might return to the lows during the COVID-19 pandemic era. The reality, according to economists and mortgage professionals alike, is that waiting for those rates to return might cost more than it saves. So the 3% rates from a few years ago were an abnormality, not normal market conditions. It's unprecedented and not a normal market. How do we get there? So March 2020, as the coronavirus pandemic shut down businesses and upended the economy, the Federal Reserve slashed interest rates to near zero. It was the most dramatic move by the central bank since the 2008 financial crisis, and it had an immediate ripple effect on mortgage rates. At the time, mortgage rates were already trending low due to lingering effects of the 2008 housing collapse. But the Fed's emergency intervention, rates plummeted even further. By summer 2020, they dipped below 3%. Then January 21, the average fixed mortgage rate hit a low of 2.65. I remember that so well. I mean, it was only 4 years ago, soon to be 5 years ago. Oh, holy crap. That was hell. It was hell that year. I'm going to say it. The bidding wars were just, oh my God, stress, like I couldn't sleep trying to get, I'm stressing over getting my clients a house. Every time we put an offer in, oh my gosh, like it was awful. It was awful. And even working on the listings, getting the offers submitted, the most amount of offers I had, I think was like 23. Now I know agents, especially in my office that had more than that. It is so overwhelming. And I know you're probably like, oh, what do you complain about? You're a realtor, you made money. Like, yeah, we did. But you know what? We worked our butts off for that. It was a lot. I'm not kidding you. It was 24/7. Like it was crazy. Listen, it was good, but it was a lot of work. Now, could 3% rates ever return? The Fed's most recent cut has already largely been priced into mortgage rates, bringing them to an 11th-month low, 6.35 ahead of the Fed's decision. Whether they drop further will depend on the Fed's future actions, but many economists don't expect them to dip below 6%. That's unwelcome news for house hunters hoping to return to the days with 3% mortgage. The era of ultra-low mortgage rates fueled the housing boom not seen before the 2008 crisis. Cheap borrowing costs gave millions of buyers access to homes that might have otherwise been out of reach. While anything is possible in theory, the experts we spoke with say return to 3% mortgage rates is highly unlikely without another major economic shock. That's the key reason right there. That's what will cause 3% rates again, is if we have a major like economic catastrophe. That's it. That's the only way. So, anyway, now this is the part I want to talk to you about. Why hoping for 3% could backfire. This is what I was just saying before. It's easy to see why many would-be buyers are sitting on the sidelines. More than 80% of mortgages today have sub 6% interest rates, and 3% rates are barely in the rearview mirror. But experts warn that playing the waiting game could be a costly mistake. Staying out of the market in hopes of a rate drop that never comes lead to a missed opportunity. Rising home prices, rent decreases, inflation might outpace any future savings on interest. And if rates do fall sharply again, buyers could face an entirely different challenge, surging competition. This is what I said before. You don't want 3% rates right now. No, 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 no. We don't want them because of it's going to bring those prices back up again. It's a guarantee. You don't want that. You want to go back to homes, selling for over 100,000, 150,000 over list price. I think we're done with that. So people need to stop wishing for this 3% rates and hoping that it'll come back. And people ask me a lot, like, no, wouldn't it be great? I'm going to wait till they come back down again. They're not coming back down. Not to that level. No. Rick, thank you for the super chat. I appreciate it. About to sell in NYC and sign with a broker. Any recommendations what the co-broker and dual broker fees I should accept? Honestly, Rick, I don't know what like what's the market doing in New York City as far as the commission fees. I don't know. I know here in Jersey, it all depends, but sellers as far as offering buyer agent compensation, it's typically 2% now that sellers are offering to pay for the buyer's agents. There are some sellers, it's rare, but there are some sellers that are still paying that won't pay anything, or they'll say submit an offer and along with your buyer agent compensation, like what did you agree to pay your buyer agent, and then you can negotiate there. And as far as on the listing side, I don't know what New York charges. I don't know if they charge 3% on the list side, 2.5. That's something you have to talk to an agent about. So I hope that helped. I really don't think lower rates will spike demand. New homes already have 5% and are not selling. Also, last time rates were lower, we had stimulus checks. That's a good point. That is a good point. Sean D, I'm just going with a townhouse because I just feel there's nothing on the market my price range. I hear you, Sean, and nothing wrong with the townhouse either. Really, there's nothing wrong with that. All right. Autumn Lynn and Autumn. Thanks for being here. People are feeling very insecure in their jobs and financial situations as well as what is coming with AI and political instability. I wouldn't buy a house right now. You and a lot of people feel that same way. We are definitely still in uncertain times right now, and people don't want to deal with that. Hi, my dear. Thank you for being here for always, forever, for life. I love your handle. Thank you. I love when you're here. Thank you. I appreciate you being here. David, 3% rates would cause the Fed to print a lot more money, and that would spike inflation. That's another good point. I'm 65, retired, $7,600 a month, no debt, VA eligible with 0 down, no property tax or PMI, 30,000 savings. I was just offered 5.99 from a lender. Am I too old, or should I pull the trigger now? If you listen, if that works for you, you'd rather pay a mortgage versus paying rent, and to say in your case, if the mortgage payment would be lower than a rent payment, then that would be getting the mortgage. Why not? No, you're not too old. You're never too old. As long as it works for you. You don't don't do the whole FOMO thing because everybody else is doing it. Let me, I have to jump on that bandwagon if it works for you. Miss H says, yes, tree removal costs. I just had 4 trees cut down and the price is not nice. Had to be done. Neighbors noticed and asked if I missed a shade. I'll replant one for shade, get estimates. Yes, Miss H, get lots of estimates because it is not cheap. Hello, Kaylee. Thanks for being here. All right. We've got, okay. So, guys, time's it. Oh, I got a good article to share with you guys. You ready for this one? So, this has, wait, hold on one second. I hit the wrong thing. Share screen. Where are we? Okay. So I heard about this. This is a story that hit the news. It was last week. So it took place here in Jersey. This seller did renovations to their home, sold it for $1.5 million. And then come to find out, none of the renovations were done with a permit. They didn't have a permit, wasn't permitted. So guess what? The new owners, the buyers took them to court, and guess what? They had to get their money back from the seller. What? Yes. So check this out. Okay, a federal judge has voided the $1.5 million sale of a Margate City home after finding the sellers knowingly concealed renovations made without a permit. In an opinion issued September 15th, the court ruled that the sellers fraudulently induced the buyers into purchasing the 4-bedroom Tudor-style home in Margate's historic Marvin Gardens neighborhood. In her ruling, District Judge Karen Williams ordered that the full purchase price be returned to the buyers. What? The ruling stems from the seller's failure to disclose that they had spent roughly $400,000 on extensive renovations, including a new HVAC system, kitchen, bathrooms, and roof, without obtaining permits. The sellers, William and Judith Breslin, potentially exposed the buyers, Vincent and Therese Novelli, to demolition orders or steep fines, the ruling said. The upgrades triggered Margate's 50% rule, a local building regulation that requires any home with improvements exceeding 50% of its assessed value to comply with modern construction codes. Common in flood-prone New Jersey towns, the rule is designed to protect properties in vulnerable areas. It requires substantially renovated homes to meet current safety and structural standards as if they were newly built. According to the court's opinion, Judith Breslin, a former licensed realtor, admitted that she was aware of the rule and intentionally avoided seeking permits to prevent triggering its requirements. Breslin also acknowledged that the home violated the rule, but falsely stated in the seller's disclosure that she was unaware of any code violations. The judge noted that the violation could subject the Novellis to daily fines of $1,250 or force them to demolish the home to bring it up to code. The court also found that the Breslins failed to disclose serious structural and moisture issues flagged in inspection reports from a previous buyer who backed out of the deal. Oh my gosh. Those reports cited rotted floor joists, termite damage, mold, and stucco defects. The Novellis purchased the home as is May 2022, relying on the seller's representations. This is why stop. No, don't. Oh my God. When people waive inspections, this is what was going on. People waiving inspections, and look what happened here. After discovering the violations and defects, they sued to rescind the sale. Williams granted summary judgment in favor of the Novellis, voiding the contract and ordering full restitution of the purchase price. However, she denied a claim for breach of contract, finding instead that the agreement was void from the start. Oh my word. So, 2 things we learned from this. Always do a home inspection. Please, always do a home inspection. And sellers, oh my gosh, what are you thinking? What are you thinking? Like, it's like, you want this to happen to you where you're going to be taken to court and you have to, you got to refund all the money? $1.5 million? Are you for real? Can they be criminally charged? I don't think so, but It is criminal what they did. And then the fact that they didn't disclose, the defects that were found on the inspection from the previous buyer, you know, I don't totally unethical. Totally, totally unethical. I mean, that's like the first thing we do as real estate agents. If somebody backs out of a deal because of an inspection issue, we have to disclose the issue. Even if the seller says, I'm going to go and repair it, you still got to disclose it. You have to. So this blew my mind. But you know what? Good on them. Good on the judge. I'm sorry. That's a classic case of a seller just trying to just trying to s- scam people. They didn't want to spend the money. They didn't want to trigger the whole of the town coming back and saying you have to bring it up to the new standard codes because many of you are watching, you're not from Jersey. After Superstorm Sandy, all of these homes that were down the Jersey Shore, Margate is down by the Jersey Shore. So they all had to meet a new code where you had all these new rules for constructions. You had to be built. A lot of homes had to be put up on stilts. All of these new changes. So that's what this person was doing. She's starting renovations, but she didn't want to trigger the town to come back and see what they were doing and say, you have to do the what's required up to code. So anyway, yeah. Hmm. Not good for them. Not good on them. Oh, well. So, anyway, also getting back to the rates, I just had to throw that little story in there. Okay. Another thing, Cat O, the offers over 80 to 100,000 last summer were insane. I know. They were, Cat. But thank God that's calmed down. It's definitely calming down. People are not. The last 2 deals that I did, they went over list, but not, it wasn't like 100,000 over. It's calming down. Okay. Um, buy it, buy, or no sell, sell. Yeah. Okay, so another thing I wanted to share with you, this other article I found very interesting, getting back to the mortgage rates. And guys, feel free to chime in. I love having these conversations with you guys. What do we got? So this was interesting. This is from Fortune. Not even a 0% mortgage rate would make buying a house affordable in these 6 US cities. So this is what low interest rates do. They raise the prices too darn high. Okay. Again, we're talking about sub 3%. Yeah, we know about that. Okay. So even if mortgage rates drop to 0%, think about this, guys. To bring this again, just to make sure y'all can see it. But even if mortgage rates drop to 0%, an average home would remain unaffordable in some major metro areas: New York, Los Angeles, Miami, San Francisco, San Diego, and San Jose. So we're still, oh my God, I hate these stupid ads. Okay. It says here, that's because of the high home prices. The reality is that buying into the market, especially in Manhattan or prime Brooklyn, still requires a significant amount of cash up front. Inventory is tight and competition is high, so the cost of the property itself is what keeps most buyers on the sidelines. So those cities, if you're thinking about going to these cities, think again, especially New York. But that's why we still feel it here in New Jersey, because people can't afford New York anymore, and they're coming out to Jersey. So Kaylee says, I knew LA would be on the list. Yeah, I'm not surprised. I'm not surprised. Yep. Well, here we go. I mean, it goes on to say here, dealing with sticker shock. When it comes to the U.S. market, tipping one scale doesn't necessarily fix the housing affordability problem. Even buyers who pay in all cash have to contend with sticker shock. The median home price in San Jose has hovered consistently above 1.6 million, which significantly strains most households before the mortgage financing costs are even considered. So even if mortgage rates drop to 0%, a median price home in San Francisco, San Jose, or anywhere else in the Bay Area would still require an extremely high down payment and monthly payments. So, yeah, it doesn't matter. Like, prices aren't coming down. So you see that even with the 0%, still gonna cost you a lot of money. While many buyers are extremely rate sensitive, running numbers at every shift in the market. The main barrier is that house prices have massively outpaced local incomes since before rates rose. Rent and home prices have been rising faster than incomes across most regions in the U.S. According to a 2024 report from the U.S. Department of Treasury, Americans now need to make more than six figures to afford a median price home. But the U.S. salary is only slightly more than half of that. Until we tackle prices, supply, local wage growth, affordability will remain a challenge no matter what happens with the rates. So that's what they're saying about that. So those cities, guys, and I think this could end up being a lot more cities, where you could just get even 0% interest rate is not going to get you. It's not going to get you a cheap house. 4.5 is the magic rate. We had a rate for years before the pandemic. 4.5 will get 3% holders to sell and 6% to 7% holders to refinance. That's a really good analysis. Yeah, I mean, that would definitely do it. But even 5. Now, last week, if you could hear me last week, I showed an article about showing that what it would cost because the whole thing was about like affordability coming back by 2030, and what they were doing is they did an analysis if mortgage rates went down to 5.5%, it would come down, whatever it would take until like 2030, or if interest rates remained the same, it'll be like 20. I think it was like 2032 before they become before homes are affordable again, something like that. So, yeah, 4.5 would definitely that would be nice. I think it'd be a nice number. I don't know if it's going to happen though. Ms. H, I think you mentioned way back that home inspectors, some are unlicensed. How do we find the list of licensed inspectors to use? Is there a list? I would always go to your local real estate agent first to see if they have a list of recommendations. Home in wait, I want to see something. I love when you guys ask these questions. How to find a home? There might be a list of like ones that are licensed. No. Yeah, I mean, I thought there'd be like a list online. Oh, wait. Here's one. The American Society of Home Inspectors, or the National Association of Home Inspectors. That's where you would find. I'm going to put this link. Hold up. I can find it. Here it is. Is this it? Here we go. Let me see if I can share this with you guys. You can take this down. Here we go. Thanks for your patience, guys. Okay, so this is it. American Society of Home Inspectors. So you should be able to state representative of practice, mentorship programs, find your home inspector. So that's one place where you can find a home inspector. But the first place you go to is the real estate agent, because we only work with licensed professionals. We don't, I had somebody years ago. Oh my gosh. He called some guy that he was a home inspector, but he only did it part-time, but he charged like $300 to do a home inspection. And I said to my client, I'm like, that's really cheap. I don't know how good that person's going to be. And he's like, well, he says he doesn't do it full time, so that's why he's so cheap. I'm like, no. So I gave him a list of other people to talk to. And yeah, listen, if it's cheap, it's too good to be true. Luke asks, who's buying in this market? You'd be surprised. There are many people still trying to buy a home. I just helped 2 first-time buyers 2 weeks ago. We got them closed. Wanted to add, we got hooked up with a great realtor in Florida through your recommendation as well. Love you, Jackie, lifelong fans. Everyone used your services. Thank you so much. Yay, Laura. Thank you so much. Thank you, thank you, thank you. So happy to hear that. Nathaniel, if buying a new home would increase your mortgage by an additional $4,000 a month, at what point would it make sense to just spend money and make upgrades over time instead of moving? That's a really good question. You listen, it's all about doing the math. You got to look at a lot of things when you're making a decision like that, right? So if buying a new home is that's gonna increase your mortgage by 4,000 a month, how much is it gonna cost to do upgrades to your house or even put an addition on? Right? So if you're gonna spend money in a new house, say it's gonna run you like $600,000, right? And you're gonna have to borrow, say, $400,000. So think about it. If you can do like a home equity line of credit, say for $200,000, and that could give you an addition on your house, right? Expand your space or renovate your bathrooms, your kitchen, whatever. That's where you gotta I can't give you like specific numbers, but that's how you have to look at it. So you gotta look at, what's it gonna cost? What's the rate gonna be on a HELOC? And then HELOC, isn't that, oh my gosh, isn't it like, oh my God, I forgot the rate. I can't, it's like to tip my tongue. If anybody knows, could you just put in the comments? I'm like losing my mind. Anyway, but that's, you got to look at the interest rate on the HELOC versus a mortgage. And then that's how I would do that. That's how I'd figure that out, honestly. That's my story. Oh, we got more people in the chat. Assuming the home is good and the length of the time on market, is there a reasonable lowball offer by percent, 20, 30%? Typically 5 to 10%. If the if it's been on for like a super long time, like close to a year, maybe you can go in 20%. It depends on the market. It also depends on where you are in the market. But, typically 5, 10%, if you're gonna go under ask. So isn't the buyer's agent, closing attorney supposed to do a check for outstanding permits before closing? Yes, the attorneys do that. So we do, and even the agents can do it too, but typically the attorneys like to do that. They file an open request with the towns to see if there's any open permits. Is to look for any permits on the home. Yes, that's what they're supposed to do. Yeah, Jen, we just saw this one. New Jersey dweller here. Have you sold any 2 families in northern central Jersey recently? If so, was the offer way above asking price like it's been in the past few years? I personally not. I haven't sold a 2-family house since 2020. And even back then, that was, this is when things were just starting to like kick into gear. It wasn't tremendously over ask. Right now they are. The reason being is there's not too many 2-family homes. That's the problem. It's unfortunate. But the ones that I do see coming on the market up here in North Jersey, they're starting at like 600,000, 700,000. They're even million. It's insane. It's insane, but they're hard to come by. There's not a lot of them. Are realtors struggling because of interest rates and home prices being so high? This is crazy. Oh yes. Oh yes. There are some agents, they're not having a good year. Thank God I'm doing okay. Our team is doing well this year. We're holding our own, but there are a lot that are struggling. It's not easy out there. It's not. My fan, I'm a first-time home buyer. I live in Los Angeles. I'm not even sure I want to buy a house right now. Price is high. It drives me crazy. I know. The only advice I can give you, just keep saving your money. Just pay down your debt. If you got any credit card bills, bang all those things out, get rid of them, and just try to save as much money. So when the time comes, you do have, you're ready to go. You have enough to put down. HELOC range is 8.5 to 9.5. Right. So there you go. But you're borrowing much less than if you're taking out a 30-year fixed, right? If you're going to go buy a house. So again, do the math. Maybe it'll cost the same if you're doing a HELOC versus buying a new home. So are HELOC simple interest loans, and how would that affect payments? So the HELOC, it's a line of credit. So basically what it is, you go through a process where they do an appraisal on your home to see how much equity you have in your home, right? So if you have enough equity in your home, you're borrowing, yeah, the HELOC, you're borrowing against that the equity. So that's what that is. So it's not really a loan per se. You're borrowing against your own equity. Is a property at T junction not good for resale? A private road? I don't know. I would think it's got to appeal. It's going to appeal to some buyer, maybe not a lot of buyers, but it'll appeal to somebody. You know, listen, there's a buyer for every house as long as the price is right. Mary Beth, we've been fixing these units the past 10 years. The problem here in Pittsburgh is getting the permits closed. Had a Generac installed in July, still waiting for it to close. Oh my gosh, really? That's annoying. I had my Generac put in. We had it closed out probably within a month. It didn't take us that long. That stinks. LGI Homes process. I don't know about LGI Homes. Hold on a minute. And let me see if I can. Okay. This is a builder, I assume? This is LGI Homes, Affordable New Homes for Sale. I have never heard of this company, this builder. So I apologize. I can't really speak on that. I think Jackie missed when closed a week early and moved in Saturday. That's right, Lisa. Congratulations. That's right. I heard from Susan. Oh my gosh, I'm so excited. So excited for you. Thank you. Thank you for using her. She was so happy to work with you, and God bless. I wish you all the best in your new home. So happy that worked out. Yay. Don, I live in Houston, Texas. I keep listening housing market crash, but I have not seen it in Houston market. Why? It depends on where you're watching your news, right? A lot of creators on YouTube here, you have a lot of guys that are out there saying, yeah, the market's crashing. The market's correcting. It's not crashing. Now, Texas, some parts of Texas, you guys down there have seen a lot of rising inventory. Prices have come down. I wouldn't say you're crashing. No. Correcting. We're in a correction. Cat O. We're seeing an influx of people from New York City and North Jersey here in Forked River and surrounding communities. Are you really? Still? Wow. Yeah, North Jersey, I'm not surprised. I'm not surprised. Everyone's like, I'm reading more and more, Kat. A lot of retirees here in Jersey, they're settling down in the Jersey Shore. Well, because down like in that area and in Tom's River, there's a lot of 55 and over communities. So people are taking advantage of that. Miss Sage, thank you. I love you. I love you guys being here with me. Thank you. You're taking your Monday nights out to come watch me. It's just thank you. Any reviews on Smith Douglas Homes? I've heard of them. I can do, and you know what, guys? I think I'm due home builder in Woodstock, Georgia. I think I'm due to do another video about home builders and like research other home builders. Yeah, I think I need to do that. Oh, Clark says they're in Georgia. Okay, yep. He said, okay, in a market like this, many suffer and struggle. Brokers, home inspectors, realtors, office personnel with the city to entitle start. Yeah, everybody does. Everybody's struggling. Look, my company had to do a whole reorg, Coldwell Banker. And did you guys hear the news today? You all know about Compass Realty? Compass is buying Anywhere, which is Coldwell Banker's parent company. Uh-huh. We're going to fall under Compass now. So I don't know all the details about that, but when I saw that show up today, I was like, oh boy, here we go. But you know what? I'm not opposed to it because Compass, from what I hear, it's a great company and their technology is just unbelievable. Like the stuff that they have for agents regarding marketing and just all the tech stuff, it's really good. So I'm a little excited about it, not gonna lie. Nathaniel, thanks for the tips. How are people in North Jersey buying properties for 800 and just knocking them down to rebuild? They are. That's thank you. I'd like to know that too. Like, where's the money coming from? Yeah, you would think people, it's the economy is struggling, but people got money to burn, I guess. I was wondering if you saw anything about AI will affect the realtor in the market. I don't want to talk with a robot. I want a real person, realtor to work with. I don't understand. I agree with you, Miss Age. I don't think AI is ever going to take over our jobs for that reason right there. You want a real person to talk to. Have you guys noticed lately, sometimes when you call, like, say, a doctor's office or some service, 1-800 number, you're calling something, and it's an AI voice on the other it sounds like a real person, but it's AI. I hate it. I absolutely hate it. And you answer the question and it responds back to you like, "Oh, so you need information regarding this, and I can help you find him, blah, blah, blah." Like, it just I don't like it. But Miss H, I don't see that happening. People, we need to interact face to face, over the phone, through text. If you have a question, I'm working with you on a deal, and something like 9 o'clock at night, you're like, "Oh my god, I just realized, I have a question about this." We're available. And my clients, they want to have a conversation with me. I have a client, we're under contract right now, and he texted me. It was like Sunday night at 8 o'clock. He's like, "Can I talk to you? I'm concerned about, or this inspection report and whatever." And I'm like, "Yeah, let's get on the phone." And we hashed it out. This is what people need. It's a very stressful process buying a house. So AI is not taking over. Looking for the two-family, Central North Jersey. Think I'll have to give up a great commute to look for two families in Somerville or West New Jersey. You might have to. You, if you're willing to sacrifice the commute, I think that might be your only option. Just found your videos recently. Enjoy them. From Nashville area, moving to Washington State. House on the market, 28 days, still no offer. So RS, reevaluate your price. Talk to your agent and see what's going on in the market currently, and see what your competition is doing. If there's other homes on the market right now, you want to see where they're priced at and make sure you're in line with all the homes that are currently listed. Imagine how the negotiation would go with AI from both sides. Oh, no, thank you. No. Give me human connection. Yes, Clark. That's right. We need that human connection. AI is highly overrated and oxymoron. Thanks, MH. Interesting about Compass. Here in San Francisco Bay Area, they often flip the unit for sellers. Simple updates to gut jobs. I think that keeps prices high here. Oh, it's possible. It is possible. Tina, are you seeing ranch style houses harder to find? Looking for one for my mother close to my home. Yeah. Here in Jersey, I am. They don't come on that often. Well, I shouldn't say they do. They do, but I would find I see more like split levels and colonials more than I see ranches lately. So they are hard to find right now. Closing on a home of 5.25 rate, is that good? That's not good. That's great. That's amazing. 5.25%. Where did you get that rate? That's incredible. Congrats on that one. Love that for you. All right, guys. What's this last one? Couple of fish, Jen. Finally caught alive. Yay. Glad you're here. New Jersey investor here. I think Jersey market will remain high no matter the rate demand, extremely high in Central Jersey. It is. And this is what I tell people. You're buying here in Jersey. I hate to bring it back to me in New Jersey, but we all know this market's been insane. Even though it is calming down now, New Jersey homes, they're always going to hold their value. right? Because of our location, because of our access to the city. We had the beaches. I don't care what people say. They call, we're on swampland and all the other, whatever. It's a super fun sites with the nuclear waste and all that crap. There's a lot of positive things here in New Jersey, and I'm telling you, homes will hold their value. Just they will. So that's my story, and I'm sticking to it. All right. So guys, so you heard Lisa, Laura share their experience that they bought homes with a great real estate agent that I hooked them up with. So if you would like, I'm going to share the website with you. If you need to get connected to an agent, please go to that website right there. Click on request an agent referral. You're gonna fill out a quick form, and then you're gonna get an email with a questionnaire asking for details about your home search, what you're looking for. If you're selling a home, there's also questions there that you need to answer, such as the property, the address of the property, name on the deed, all that fun stuff. And then once I get that information, then I'll be able to start the search for you to find you an agent. Now, if you are looking in New Jersey, if you are looking to purchase a home in New Jersey, I have very similar link, just looks just like that. I want to show you what that looks like. Here's my Jersey link. So if you're going to sell or buy a home in North Jersey, click this link. Even if you're looking in South Jersey, Central Jersey, I could still get you connected with an agent down there too. North Jersey, if you want to work with me and my team, this is the link you need to go to. Fill that out. And what I do is I schedule a Zoom consultation and we have a conversation and talk about your real estate needs. So, all right, you guys, I'm so glad my sound is working again. Thank you for coming back and listening to me. Maybe it wasn't, maybe I talked too much and you guys are like sick of hearing from me. But anyway, thank you so much. Really appreciate you all being here. Have a wonderful week. For those of you who celebrate Rosh Hashanah, I wish you all a very happy new year, and I hope you have a great celebration with your families. And then I'll see you all next Monday. So everybody have a fantastic week. Until next time.